Yeah, hi there, and welcome to the short session having a look at the pattern recognition scanner in more detail. This Trader Masterclass series has been put together specifically to show you kind of real-world trading application of some of the new tools on our new trading platform. One of the first things that I have to cover before we move on with the rest of the session is a little risk warning. So if you just take a quick second to read through that. The pattern recognition and price alerts and chart message boards and economic calendar tools data are for general information only and are not intended to provide trading or investment advice. And if you can just go ahead there and read the rest of the risk warning there before we go ahead and get started. So the pattern recognition scanner in general was created by CMC on the back of extensive client feedback during educational seminars and trading labs that we do, because we do work in partnership a hell of a lot with our clients, and there was a need for a kind of an automated scanner utilizing technical trade setup. So we spent a large amount of time developing the system, and because most of the team that work in product development, myself included, come from a trading background and trade extensively utilizing a whole host of different trading platforms, we really believe that the pattern recognition scanner itself is something that many clients will find exceptionally useful. So the next thing I want to quickly do is actually just jump on to my actual trading platform itself, and as you can see there, I've already got my pattern recognition scanner element already opened up, and you open up pattern recognition from down here. The very first thing you want to do is just give yourself a quick preset name. I'm just going to call it test 1. You've then got the ability to choose which formations you want to go ahead and select. You can just go ahead here and select all if you want to select all of them. Personally, guys, the ones that I find to be the best out of all the pattern types out there are the wedge, channel and triangle. So I'm actually just going to go ahead and turn these other ones off. Again, this comes down a lot to personal preference. It really depends what you like yourself. When it comes to products, again, you can go ahead and select all. I normally take treasuries and companies off. Once again, that's just completely personal preference. I like to day trade, do lots of short-term trading on the shorter intervals, so companies sometimes might not be as effective for that. Normally, if you want to use the pattern recognition scanner on companies, you look at things from at least a daily perspective. You can day trade equities, but it's not as successful as looking at currencies, indices and commodities. And treasuries is just a personal choice. I don't tend to trade a lot of treasuries myself, but many clients of CMC Markets do. So regards to all time intervals, I like to look at all opportunities and see what the setups are. So I'm just going to go ahead and select all like so. And again, I want to see emerging and completed patterns. To be honest, guys, the majority of the time it's a completed pattern section that I look at most of the time, but sometimes it's still worth checking out some of the emerging patterns as well. Emerging patterns are opportunities that have not yet provided a breakout, whereas completed patterns are trade opportunities that you can take advantage of right now. So you've got the product name, obviously you can launch the fact sheet and a chart just from here. You've got the alert time, you've got the direction of the trend, and the time interval. If it's 15 minutes, that tends to be a little bit more short term. If it's daily, obviously it's a bit of a longer term position that you're looking at. Then you've got the length, which is the number of bars in the pattern. What I tend to find is that the longer the length of the pattern, potentially the more significant that it can go ahead and be. So some clients tend to look at things for that's got a little bit longer duration. 7 or 8 bars is actually pretty short term. 10 to 15 is maybe that little bit better. Then you got the star rating system. Star rating system is pretty cool, and part of the reason for that is it takes the direction of the pattern breakout. Okay, so you can quite clearly see the trend right here, and it adds a MACD, an RSI, a slow stochastic, a DMI negative and a DMI plus, and an ADX, and a 21 and 55 period simple moving average. Now that is actually a hell of a lot of technical indicators to have a look at. So what the star rating system does is takes the information and displays it in a star system between 1 star and 5 stars. 5 stars basically means that the majority of those technical indicators all match up to the direction of the overall trend. If it's got a 1-star signal, that still potentially means that it is worth looking at. It doesn't mean that it's a bad signal. It just means that a lot of the other technical indicators are either negative or perhaps giving conflicting evidence. It's also worth pointing out in regards to pattern recognition, as the price action is always the primary reason for instigating a trade in technical analyst terms. The indicators are always seen as a secondary factor, so they're just given corresponding evidence to back up the view of the position that you're looking to trade. So the star rating system, rule of thumb, the 5-star signals don't always yield the top results, is what I found when doing a lot of testing on this. It's always good to check the technical setup yourselves, and we'll cover some of that as we go along in this short session itself. You can go ahead there and see the pattern type. There's a little tooltip there that tells you which each of them are if you're a little bit unsure. And you've also got the ability to set an alert once it becomes an emerging pattern and then goes through to becoming completed. This is particularly useful if you've got a setup that you want to be alerted to. When it appears down here in the completed pattern section, it will be highlighted in purple so you can quite clearly see what's going on. I'm just going to go ahead and maximize my completed pattern section because this is the main window that I tend to look at, and I check this multiple times throughout the day itself. You've got all the same stuff there as what you had with the emerging pattern section, but you've got some extra info here, particularly important. You've got the price at breakout, and then you've got the real-time points change versus where the current market price is in relation to the price at breakout. For example, if we just go ahead here and have a look at cable or GBP USD, what you'll actually see there is you can see the actual breakout itself. You've got the grey dotted line just going across the side there, and then you've also got the price projection box. Now the price projection box is pretty important. The price projection box is calculated using classical technical analysis measurement techniques based on the technical patterns that you're going ahead and trading. If you highlight the pattern like so, you can see this in the ascending triangle, and it's a bearish formation. It's a 3-star signal, which means some of those technical indicators that I mentioned there before are in alignment. There might be some neutral or conflicting evidence, but 3 stars isn't too bad. And the idea behind it is if it follows traditional technical analysis measurement techniques, is that we would expect the price action potentially to move within this area. Now obviously there's no guarantees in life. This is in essence just a technical indicator of what may happen only purely from a technical standpoint. It does not factor in any fundamental factors in here, and it's very, very important that you always bear that in mind. The best traders out there always trade a mixture of technical and fundamental analysis, and it's very important this is only part of your repertoire, your armory of trading, that you don't solely rely on the technical analysis patterns, but nevertheless it is quite an effective tool to utilize. So what we're expecting here is if the price action is trading along this area, it's classified as being active. As soon as it breaks into the bottom part of the price projection box, it's classified as a low success. If it hits the medium part here, it's a medium success, and if it breaks the end right here, it's classified as a high success. If the price action continues to move along this direction and then breaks the right hand side of the price projection box without piercing it, it's classified as a failed signal. Now that's pretty important because you can actually go ahead and back test a lot of these signals as well. I'll come to that in just a second. So typically if you saw a pattern like this, you might want to get a bit of an idea about what has been the back history of it. How successful has this pattern been previous? So what you can actually go ahead and do is this is a triangle formation. It's on a 1 hour time frame on sterling versus the US dollar. So I can actually go to history right here. I can go product type, I can go currencies, I can look for GBP USD, and I can see that that was a triangle formation and that was 1 hour. And then it will load up all the other patterns that have come up on sterling versus the US dollar on the 1 hour time frame on the triangle range. And as you can see there, it gives you a full statistical breakdown of all the previous patterns and lets you know all the pattern types from the earliest date. Obviously, when we turn pattern recognition on initially, a lot of the data has been compiling since the 5th of May 2012, but it really gives you a good idea of what to expect. You can see there that 46.67% of all these patterns result in a high level of success, which means that the price action statistically and historically has broken through this area almost half of the time. Then you can see medium success 26%, low success 13%, and 13% of the time the price action does not pierce any part of the price projection box. From a statistical analysis point of view, this is pretty significant and can give you extra confidence to help you decide when to place your trade. But again, past performance does not dictate future performance, and you should still do all your analysis beforehand before placing any trades. Don't rely purely on the pattern recognition scanner to do all the hard work for you. Unfortunately, you still need to do some of your own analysis to choose when to place a trade. If there is something on here that's of interest to you, what you should go ahead and do, for example in this case, is open up the buy or sell ticket like so. If this was something that was of interest to you, and of course you've done your other analysis, enter in a value that you felt comfortable with, depending on your risk profiles. And as you can see there, you can go ahead then and decide how you want to set your risk management. And remember guys, you can go ahead and trade directly on the chart itself. If you feel there's a high chance of success here, I would look to probably place my price projection, place my take profit order somewhere within this top range, as in this particular instance, almost half the patterns end up going to a high success rate. And then I'll probably look to set my risk management a little bit away from where the price is right now. Obviously the price is still dropping, and sometimes look to place it a little bit above a recent resistance. If you want to play it really safe, you would actually tend to have it above this resistance at the right end right here. What's quite important about this particular example is that our risk reward ratio here is not that good. Okay, so in this instance I wouldn't necessarily look to go ahead and do this trade because you're risking a lot more money than what you're looking to make on the profit side. What you could do is what a lot of clients would do, is look for the price at the breakout range. So this is the broken support, and just have your risk management set a little bit above that. Usually from a technical analysis standpoint, if there was a retracement back up to this broken support, you would expect it to act as resistance. So if the price action broke quite far above that, you would probably think that that pattern is no longer valid. Okay, but once again, it comes down a lot to your own trading experience and how you usually set your risk management. In this instance, I think the risk reward ratio is that little bit more tenable. I go ahead and click confirm, and then confirm again, and my trade then would be done. And you can actually go ahead there and you can see that the trade is quite visible on the chart for as long as I leave this chart open at the very top right there, and you can see the trade progressing as such. Now usually when you get price breakouts, the price action could, well, you would expect it from classical technical analysis aspects, break down there quite quickly. That's not guaranteed going to happen, but from a pure technical analysis standpoint, that's what you'd hope to happen. Sometimes there can be a retracement, as I mentioned before, back up to this level. And it can be quite common for some technical traders to instigate a short position here, again with the risk management set appropriately, expecting the price action then to move back in the right chosen direction. It's also worth noting it's still possible to turn on the manual pattern recognition systems on here. So we can actually go ahead and add other triangle formations onto here, other wedge formations, whatever you want at the end of the day. And you can scroll back and see that a little more clearly, and you can see how many of these price projection boxes have resulted in successful trades there before. Obviously you've got things here within the history section, which is very, very useful, but you can also see it within the charts itself. A lot of the time what I like to look for, if I go to my actual emerging completed sections on here, is every 5 minutes it scans your chosen products. And if you select every single asset type, there's over 120 products to choose from. And it does scan there every 5 minutes as well. If I actually go ahead and have a look at some of these other ones, and there's something that I find interesting to go ahead and have a look at, I would always go to the history tab there, enter in the details here, just to check it from a statistical analysis standpoint. I also like to have a little look at other products as well. For example, if I go to say indices and select the US 30 right here, and then look at triangles, as you can see on the 1 hour time frame, you get very high levels of background statistical success, historically of course. If I go then and select a slightly shorter time interval, it will load up like so. As you can see there, it's very, very quick. What you tend to find quite a lot is the longer intervals can't result in a lot fewer trade opportunities, but they can sometimes result in a higher level of success. It really does just depend, and I would expect you to do lots and lots of research and have a play about with this to try and get the most from it. It's also worth noting on the emerging completed section on here, what I really like to look for when there's new patterns that arise is how much further the price action has increased or decreased since the alert was generated. If it's in red, that means it's gone against you. So the Australia 200 was giving a buy signal, so the market has actually retreated that little bit on there as well. You've got this thing here called a price projection range, and this gives you an idea of the maximum potential price level that the price projection box is giving you. If we just jump back to the sterling versus US dollar here again, as you can see there, that level at 54.40 is pretty much bang on what it's suggesting you to go ahead and have a look at on here as well. And it just gives you a bit of a flavor. If you have a look at this price relative to this price right here, it gives you an idea about how much further it might still go. So typically if this has already moved quite far in the right direction, you've maybe missed out on the opportunity. Ideally you're looking for something quite close to zero here in relation to this, so it gives you the most potential price action still to go. As you can see there in real time, if we have a look at the points change, move down, if it's in green, that means that it would result in it has resulted in a profitable trade. If it's in red, it means it's currently going against you. And remember, you can launch order tickets directly from here. So again, pattern recognition is an incredibly useful tool. It's something that you guys at home should definitely use as part of your analysis. If you're new to this, I'd recommend just playing about with it to begin with. Do lots of back testing using the history, see what patterns come up, see which ones yield the best results and what intervals, and get a bit of a flavour of what products, what interval, what pattern type result in the highest level of success for you as well. But it's always important to realise that past performance does not guarantee or dictate future performance, and that this should only make part of your analysis process. Still continue to do lots more of your analysis at some point there in the future. But anyway, I hope you found this quick session quite useful. The pattern recognition scanner itself takes a lot of time away from my day that I had been dedicated to doing a lot of manual analysis myself, and I actually look quite forward to seeing what new opportunities present themselves every 5 minutes when using the scanner itself. Anyway guys, good luck with your trading, and hopefully we'll catch up with you again at some point soon. Take care, bye bye.